Welcome everybody to the latest episode of High Stakes. I'm Paige Soya, the managing partner of K Street Capital, and today's episode is all about how portfolio diversity can fuel bigger wins and bigger returns. So obviously there's a lot to unpack there, and we have one of our longtime friends and co-investors, Melissa Bradley, with us, who's the general partner of BAE Ventures. And before we get started, Melissa, why don't you give a quick intro and a little bit of background about you?
Great. Well, I'm honored to be here. So you said my name is Melissa Bradley. I currently live in the District of Columbia. I have the extreme privilege of being the managing partner of the BEA Venture Fund. My life and venture is longstanding. I've been doing this for 20 years, but I'm also a serial founder. So I have started many companies and sold two of them. And also, I'm excited to be a professor at Georgetown University at McDonough School of Business.
This topic about how diversity can help get bigger wins and better returns in a portfolio, I was thinking about it later and I was like, well, somebody might read that and think, do they mean, like investment diversity or stage diversity, which is not what we're talking about here on this episode. So how would you describe the kind of diversity that we are talking about?
Yeah, so I think there's two aspects to it. I think one, when I think about diversity in our investment thesis, for BEA Venture, we're trying to close the wealth gap. And there's lots of levers to pull there. So I think in some cases we have four pillars. And so there is a level of diversity in terms of the types of companies we invest in. But when I think about diversity, it is who are we investing in and what is their experience, right? My first company I started in 1990. And when I went to raise money, nobody was trying to give me a dime. And I ended up selling that company within 3 years. Did it again. Somebody finally gave us money, sold that company within 3 years. And so I think I am mindful that in this world of venture capital or just any allocation of capital, there is a risk aversion side and there's a risk tolerance side. And I think unfortunately we have been risk averse to things that do not look like us. So for me, this is an exciting conversation to talk about why it's important to have diversity across the board in all facets in a fund. As a finance major, the one thing I'll always remember is that diversification is the key to any successful portfolio. But the problem is that not everybody is doing that to its fullest potential. And I think that's partly why we don't see the outsized returns we used to see in venture.
Yeah. And how do you think about diversity when you're investing? And I can share my thoughts on it too, but because some investors, when they think about the founders that they want to invest in, it's the founder themselves, or is it the founding team, or is it the leadership team that you're looking at, or how do you think about that?
So we look at it all the ways. We look at it, who's the founder, who's the founding team, and who is their customer base. We are mindful that in order for us to close this wealth gap, it's got to take multiple layers in terms of those who are both the asset holders and those who are the asset earners. So owners and employees. And so we are laser focused for all of my funds, been laser focused on job creation. I think entrepreneurship is an amazing pathway to wealth. I think you and I both know everybody doesn't make it. And so it is indeed somewhat of a gamble. And so we look at it as like, hey, do we have diversity at the founder level who's going to drive this mission and vision? But also, or do we have the diversity of the impacted stakeholders where it's an opportunity for them to also level up their income, level up their economic well-being?
Yeah, that's how we think about it as well. And we try to make our investment decisions based on our investment thesis. It's not strictly around the founders themselves, like the diversity of the founders themselves, but we keep that as a lens and we make sure that we have an inclusive process, which ultimately means that we do invest in a lot more diverse founders and teams. And that just naturally is what happens if you're trying to make it a priority, even if it's not like like a requirement to the investment thesis per se. And I guess one of the things I wanted to talk about that I even struggle with myself is like some of the misconceptions in venture around the risks and rewards of backing diverse founders.
Yep.
So one of the things I wanted to ask you is, and I probably should have done more research on this myself before we talked, but I've seen a lot of conflicting information on what the returns actually look like, what the financial returns actually look like.
Yep.
And I wonder if you could shed some light on that and what your experience with that's been and what's the right framework to think about it.
Yeah. So I think I think data is only as good as people read the footnotes. I think I would say first and foremost across venture, there's just varied returns. I think when you add the layer of diversity, I think one, for me in particular, we look at tech companies, we look at CPG companies in the past. We looked with a lot of different sectors. And so the performance within those has varied, right? CPG, it had its ebb and then it had its flow, and now it's whatever, because a lot of that is very much tied to the macroeconomic environment. And so I think on average, because of the diversity within the portfolio, I would say we have, personally, I should say, I have seen anywhere between 2 to 5x, depending on where we are. And I think, let's be honest, I
Is
think
that
it's
on an overall return, like an overall
overall
portfolio
return.
basis? Yeah.
Yeah, but I think, let's be honest, people who've been doing this a long time, luckily we've gone from scattergram to focus. But back in the day, people would just like throw money out there, and it's kind of that spray and pray mentality. And I think for us, it is around the diversity of who the people are, but more importantly, not just because they're diverse, but they understand who the customers are and they understand different segments. But I don't know the numbers accurately, so I don't want to put them out there, but I would argue that there has been probably the same amount, or if not more, returns from a non-tech perspective if you were able to look at other sectors, but nobody ever does, right? If you think about the M&A activity within the CPG community lately, if you think about Mael, if you think about Honeypot, I mean, they're huge. And I haven't seen those with respect to some of the tech companies lately because no one's really going public. And many of them are still struggling to be profitable. So, I think personally, again, 3 to 5, 2 to 5x has been the range for the past 20 something years. And that's been a diversity. We also do spirits, have done spirits, which is really hard. So I think a lot of it is also what has been sector performance, right? And I will say that there's been a big difference since we sit in DC, a big difference between those in regulated industries and those in unregulated industries as well.
I'm glad that you brought all of that up because that's not what I thought you were going to say, because in my mind and everyone's in their own little head of whatever they're doing every day and not thinking about the broader picture of all of this. Because I work only in tech, right? Like pretty much exclusively almost my entire career. And that's the like venture capital tech. And that's the lens that I think about investing in diverse founders and diverse founding teams through. And that's the thing that to your, like I mean, you pretty much said it. Like I don't think we have the evidence yet to fully realize what that could look like, but maybe it's coming. Maybe it's just early.
Yep.
Is that your perspective on it?
I mean, I think it's coming to some extent, right? I think we only track what's measured. And I
Right.
think that if you think about the atypical folks who do venture research, it is overweighted to Silicon Valley, which is all tech. Maybe there's 1% of somebody who's not doing tech, but good luck to them. And so I think if you look outside the country, right, if you look in the South, a lot of that is CPG, right? A lot of that is maybe tech enabled, but not necessarily hardcore tech. Now coming back to DC, we've got a lot of that nanotechnology and some of that really hard tech. I don't think we've done a good job looking at that either. I think we haven't done a good job of even there was a guy I used to know, Steve Frederick, who does a lot of stuff that comes out of the federal labs. We haven't, I don't know that we've ever done any analysis on that. So I think we don't have a large enough database to really say what are the overall returns of VC, and then how do you begin to slice and dice by race, by gender, by sector, and then compare that to macroeconomic performance, right?
I'm sure you've seen too that some of the early stage venture return data points on women founded companies versus male founded companies, and they're of course everyone's promoting how great the women founded companies do compared to male. Whatever, again, data points, who knows? But the data seems like it points to that being a positive
That is
thing.
historically so, yes.
Yeah, historically so. But if we like, I don't know if we have the right data points for all the other diverse founders that we're looking at in those same categories. So I think that's, to your point.
We don't track them.
I think one of the other misconceptions is just in tech specifically, and maybe also in other categories that you could speak to, but is that there aren't enough diverse founders, and that I think at least there was some truth to that at some point.
Absolutely.
And I don't know if it's still true or not today. That's something that I struggle with also. Like we don't get as many qualified diverse founders as we would like,
Yep.
right?
Yep.
And so I think the idea of having a thesis around it is challenging if you don't believe that there's enough of them out there to get the high returns. So
Yep. Yep.
what are your thoughts around that?
I think you're right. I think when I started in 2000, early 2000s, you couldn't find people of color. Like they were regionally appropriated to Northern California.
Yep.
Because it was very much based on what your prior work experience, professional experience has been, and your educational level. And I think there is a direct correlation between the number of tech jobs that are run by women and people of color, as well as the number of computer science or related degrees that are attained by women and people of color. I think there was a complete surge. And so we've seen a lot more companies. And now that BEA looks at kind of seed plus to Series B, I am amazed and humbled by the number of Black tech founders that we are seeing, or tech founders who are focused on historically marginalized communities. I was like, wow, like, where'd you all come from? But I think that you will find that was directly correlated to they're younger. They understood and had the opportunity to really pursue computer science. And also, there were a lot more, I don't say programs like in a bad way, but there were programs where they were being exposed to this concept of venture. They were being exposed to jobs outside of working at IBM or somewhere else, no disparagement. And I know I didn't grow up like that. I didn't grow up even understanding about tech because there was none. I didn't grow up understanding like it was either get a good government job or get a good corporate job. Nobody was talking about entrepreneurship. So I do think the evolution of the entrepreneurship industry or ecosystem has evolved, that now it is dinner table conversation, that now that there are entrepreneurship programs at academic institutions as well as the informal, nonprofit or for-profit accelerators, so that people are fully exposed. And I think that, let's just give it 5 to 7 years, there has been a surge of, I think, diversity of people because one, it's accessible, two, they understand it, and three, they have a connection to it. It's not this thing that's way across the country. They have an anchor within their own community, however they define that, geographically, personally, socially, professionally.
Well, I think that's a good point, and that's what I kind of think when I think about DC, for example,
Yep.
right? DC didn't used to have a venture community at all, let alone an inclusive venture communities,
Right.
and that changed a
Right.
lot even in the last 10 years because of a lot of the things that you just mentioned. And are you seeing that you're finding a lot of these founders all across the country and not just in California?
I am pleasantly surprised in my prior role how many we found in DC. And I should say the DMV, right? Because I think that having worked at a fund in Virginia, you have the nanotechnology and the sciences that are out kind of that Dulles Toll Road corridor. I think in Maryland, you've got a series of scientists and hardcore technology around the universities. And then I think in DC, you're getting there, and I'm just happy we've moved past GovTech. And so I think within the past 7 to 8 years, there has been an increase, I think, both because the universities now, I don't think there's a single university in DC that does not have an entrepreneurship program, both supply and demand side. So they're learning about starting a business and investing in businesses. I also think corporations have come in. I think the government sector has declined, not so much in terms of presence, but I think in terms of the percentage of jobs they hold.
Yeah.
So kudos to the city for understanding the diversity. I think, the booming sports teams, the booming commercial have created technology. I remember a company that we had invested in my prior fund at 1863.
Are there other misconceptions that you think people have about investing in diverse founders aside from the
Oh,
ones I just mentioned?
tons, tons. I think that the top one is that founders of color only help communities of color, and that is so not true. I think that that is their priority, not to the disparagement or omission of someone else. But I know a lot of tech bros when I was living in San Francisco and Silicon Valley, and I would say, "Who are you going for?" "We're going for a guy who looks just like me."
Yep. Yeah.
Okay, great. But is it going to advance? Absolutely. But right, so I think that there's this misconception that we only care about people of color. No, just like anybody else, we go with the market that we know best. I will say that the one thing is we tend to over-index on trying to have an impact within that community because we understand the construct of the social norms and
Of course.
barriers, and so we like to think that business can have an impact. I think the second thing is that we don't know how to manage money because I think the assumption is we're all poor. And I think that's not true. And I think that's completely ties into women, right? Where we know that one of the things women are really good at is asset management. That we know they have greater returns, they have different risk profiles, they don't lose money as fast in the VC community. So I think that's a misconception that we as people of color are no different. I think the frugality of how many of us, not all, have grown up, but the stories that we hear, I think managing capital is something we take very seriously. And I think we tend to be much more conservative in that as opposed to, well, we're going to spend because we don't know any better. And I think the final misconception, which I'm consistently fighting, is that we don't understand how to build a business. And I think because it's not necessarily in our in our family lineage where the perception is like we're not the heirs or the recipients of folks who run big companies, right? Because there just haven't been a lot of black CEOs, period. But I would say that my great great grandfather ran a restaurant on Columbus Avenue in New York City. Very different, but there was always this thing around like you got to be kind to people, you got to understand your customers, you have to manage your money, and
Oh,
so I
yeah.
think this unfair correlation of having an entrepreneur, being a senior executive, that's what it takes to actually be a successful entrepreneur. And I would completely disagree, right? I
Yeah.
remember my first business going to SCORE, and the woman said, "We'll never give you a loan for a variety of reasons." And I was mad at first, and then I realized, oh, it really wasn't her fault because her perspective as a corporate executive was one that had a different risk aperture than what I was willing to take. And I just think historically marginalized communities, no matter who they are, have a higher risk tolerance and a slightly larger risk aperture
Hmm.
toward understanding because I mean, I'll speak for myself. Like, what have I got to lose? Right? When I started my first company, I was like, what have I got to lose? I'll just fire myself and go get another job. And I don't think that's uh, overly risky. I don't think it is unwarranted. I don't think it's undisciplined. But I do think it is a understanding and a willingness that there is always something else I could be doing, and the opportunity is worth pursuing.
Yeah. Yeah. And you're right, though. That last one, I should have thought of that. That's probably the biggest one that we struggle with because we see a lot of founders who, not that we think that they don't know how to run a business, but when you're getting pitched by founders all the time, right? When you're an investor, you know which ones clearly know what things that they should have in the deck, what things they should, how they should be answering the question. You know what a good answer to a question is and what a bad
Yeah.
answer is. And unfortunately, and this is changing because I think a lot of the program, there's been a lot of education. And like you said, venture has become, it's not that inclusive still, but become more inclusive, I think, across
Fine.
the whole country to teach people about this. And it's not as like tiny of a box as it used to be. But unfortunately, a lot of the founders we get who I really like the founder, I think the business is cool, but I can tell that they're just not ready for venture investment. They don't really understand it. And I don't even know if venture is the right funding vehicle for them either. And they don't know that, right? They
Right.
don't know that yet.
That's
And I
right.
think that that piece might still linger and be the one of the most challenging, I think, lingering factors to VCs who do look at those decks, but might automatically see a person of color and think like, I already know that I'm probably not going to invest in this person because they probably don't understand. They probably don't have a venture business,
Right.
and so they just might not take the call. And then we're missing out on like this whole swath of opportunities that could have been,
Right.
right?
Yep.
So
But I think you're right, right? I mean, I want to say that I think people criticize venture, right? It's racist, it's sexist, whatever. I'm not going to say it's not true, but I think we have to understand what is venture. I'm a finance person. Venture is about betting on big things. And I do think that's the one challenge that we have with women and people of color is that I oftentimes don't think we think big enough for VC because our risk tolerance is I'm willing to make some sacrifices, but I don't want to lose all my money because
right.
that's not an experience we're trying to get back to. And having been a VC as long as I have to look at people and go, so what if this doesn't work? And they're like, well, it's going to work. I'm like, no, 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 no. Like, what if it doesn't work? And I do think that oftentimes those are not questions that women or people of color are culturally prepared to answer because that's a bridge too far in terms of
Yep.
risk. And so I do, and I also think respectfully, like I think our social capital is very different. I did not meet my first fellow CEO of color until after I sold my business, and I was like, "Where have you been all my life?" And so I do think that the risk tolerance and the not necessarily the bungee jumping, but like, yo, let's just go for it and let's crank it out. Like that's not how I was raised, right? I was raised of like, don't make anybody mad, don't lose any
Yep.
money, don't take money from other people. And so I do think there's some cultural norms that we have to push through that you're absolutely right. Every business is not venture ready. And I think that's something that we're still pushing through, even with the founders that we invest in, to help them understand like you've got to grow faster. Like I need you to move faster
Yeah.
because speed is our friend, not our enemy.
Exactly. Yeah, like take that risk if
Yeah,
well, of course, if you can actually, if it's worth it to take the risk and
absolutely.
spend the
Like I
money
mean,
and whatever. But I think that's a really good point. Yeah, it's just a challenge. And I always think, even when I started my first company and it was venture backed, I also, like I think in the beginning didn't totally. I don't even know if I should have raised venture money back then, to be honest with you. Like it worked out fine, but it could have been better. Maybe it would have been better if I just did it differently and had some other form of private capital or something. I don't know,
Yep.
but but I had to learn like all of these things as I was doing it. And I think that I went to an accelerator at one point where I learned a lot of it, but I think you don't learn all of it there. It's just a process you have to go through. And, I think that
School of
that
hard
takes,
knocks.
yeah, it's just exactly. It's like that process that
Yeah.
you go through that teaches you those things and really can enable, all people to get past this and all people's businesses to be eligible for venture if it makes sense and to know when it makes sense and then to, attack that path. And
Yep.
hopefully that changes and that changes the stereotype around it for VCs who are looking at those companies or maybe not looking at them because they're afraid that they're not a fit before they even take the call,
Right.
right?
And the reality is, like right now, I mean, obviously data is data, but right now there are more white companies failing in venture than there are women companies or black companies. Now,
Of
part of that
course.
is the size of the pool, but I also think it's just, statistically, I think it is true because of volume, but I think it's also true because of how we look and manage growth and how we manage risk and honestly how we manage people. I think taking entrepreneurship out of it, if you look at any kind of management research or whatever, it just talks about the nurturing, the innovation, the risk corrected decisions that women and people of color make versus other groups. But I think those are the conversations we don't have. And I think, unfortunately, the role of culture and social norms is often around what makes the investor feel comfortable versus what are the right characteristics to grow a multi-billion dollar business. There's enough markers now that show that every person in the country can build a $1 billion business. The question is, do they know how to get there within the time frame required for
Exactly.
venture?
Exactly. Yeah, exactly. That's exactly right. Do you feel like, I mean, how do you feel like the trends around diverse founders raising money have changed over time, or have they, or even since 2020 era?
Yeah, I think post the murder of George Floyd, tons of money flowed in, both to black businesses and to black GPs. And I think there was a boom. And it's one of the reasons why the BA Venture Fund is specifically looking at Seed Plus to Series B, because there's been a ton of money that has flooded pre-seed and seed. And for those companies that are really on a trajectory, the cliff effect has just moved downstream, right? Before it was like I couldn't get any money to start my business. Now I can't get any money to grow my business. So I think there's a lot of companies that have started. I think, in all fairness, not just because you can doesn't mean you should. I think that there are some businesses that were started that were very much focused on the moment that I think we're just going to see fall off the radar screen. And I think that's just typical, I hate to say it, but casualties of the venture capital space.
Yeah.
I think we're seeing a decline in diverse GPs because the market has just retracted so much and the dollars are just not flowing. I think in part because we don't have a lot of diverse GPs, and so therefore the kind of median track record is just not like there's just not enough people to decide. And so I think unfortunately you have a lot of people who started fund one, maybe fund two, there are no more. And so that's challenging because the dollars have dried up, right? And I think part of that again is risk aversion and part of that is macroeconomic, right? There's so many people now that are overweighted in private equity and VC. They're just
Yep.
like, I don't have any more allocation and we don't really know what's happening with the economy. So I think those two have conflated to see a shortage or a reduction in terms of who are the diversity of people that can make those allocations. On the flip side, I think diverse founders are booming, right? We have seen a ton of diverse founders, women, people of color, black women in particular, who have come through, and some of them we've invested in who are just doing great. I think they took advantage of that moment. They have capitalized not just on the aperture that opened around diversity, but also what's happening from a sector perspective. They're looking at growth within sustainable communities and green solutions, and that's booming. And I think that's really the part we don't talk about, right? That I think if you put three people together of different races, different genders, ages, it is going to be 50 to 60% about how they respond, but it's that other 40 to 50% that they have no control over. And to me, like as a founder, that's what it's about. How do you manage the uncertainty? And I don't know that there's a right or wrong way, but I do think that that's what entrepreneurship is about, and that's what VC is about, of figuring out, do we trust this person to manage the uncertainty, and do we have the capacity to step in and bridge that gap in those times of uncertainty? It's not, that's my philosophy. I think too often it's like, is this person a winner? But I also think it's because many GPs have never run a business. Like
Yeah.
they they're like, yeah, go. It's like you might as well go gamble. Like, is this horse better than this horse? I don't know.
Yeah.
I'm just reading a bunch of data. And so I do think that there is a competitive advantage for folks like you and me who have actually run businesses to understand what is that tipping point, whether it's money, whether it's skill, whether it's customer opportunity, that's going to make this company from a million to $1 billion business.
Yeah. I think that's definitely true. And I also would wonder like what your thoughts are on how funding has changed for diverse founders as it relates to the political environment in our country right now and a lot of the things we've seen in the news. Because I think there's a lot of fear around people continuing those funds anyway, or starting new funds in that space, or coming out right and saying that that's part of their thesis for fear of, just being disbanded completely.
So I will say the world has changed that we now have three law firms, so that things are just measured in terms of what happens. I do think that at the highest level, people, a percentage of people, but I think it's a relatively small percentage of people, have just completely clawed back and said, I'm not doing any work around diversity. And specifically, I'm not doing any work with Black founders. I think there's a slightly higher percentage who have said, I'm still willing to do it, but I need to figure out how to do it so that I can keep doing it, not do it and run the risk of something negative or some kind of backlash. I think that's the majority. I think it's a bell curve. I think
Yeah.
the majority, because they understand, first of all, they weren't just investing because people were Black. They weren't just
Yep.
investing because they were diverse. They were investing because their aperture and eyesight had opened. They were like, wow, this is a really good business. I honestly don't think anybody invested in anybody just because they were Black. I
Yeah.
think they were like, wow, I found somebody who fit my criteria and they happened to be. I truly believe that based on all the diverse VCs that I talked to. Nobody was specifically out there looking for Black people in venture. It doesn't serve us well to just look that narrowly. And so I think that they have been pleasantly surprised that those companies are growing. But I do think, again, some sectors have not, right? CPG took a tank. I mean, let's be honest, Target is not chump change. It's also not an easy place to be. And so that clearly had a negative impact if you think about the CPG space. I think around the environmental space, boom, I mean,
I
growing.
know.
Like I was like, woo, thank goodness we're in some of these companies and the political
Right.
environment is allowing us to advance quicker. And so I think it goes back to how we started the conversation. It is building and scaling and being successful in a business is not just about a founder, right? It's about the founder, it's about the customers, and it's about the environment. And I think two-thirds of this right now, that's the challenge we're having. The founder is the founder. Customers are getting a little squirmish, a little concerned about what they do, specifically in the B2B sector. And the larger economy is saying, like, don't bet on those people. And so I'm hoping, knock on wood somewhere, um, I won't say it's a phase, but it's a moment where we realize the economic loss, right? I mean,
Yeah.
when Citibank comes out and say that racism has cost this country $16 trillion, I'm just not clear why we're not paying attention to that. And I'm not saying that because I'm Black, but I honestly think because I'm a finance person, first and foremost,
Yep.
wherever
Yep.
I'm like, wow, we are willing to lose money because of racism. Like that's the part that gets me, right? Like you have the fastest growing segment of entrepreneurs being diverse founders. And are we really willing to not bet on them because they're diverse without the consideration that small businesses drive employment in this country? I mean, you saw the jobs numbers, like we're tanking. And so I would like to believe that we're going to hit a low rock bottom and bounce back up and say, the filters that we're using to make decisions are not serving the country well. Forget the Black and brown community. It's just not serving the country well. So
Right.
I don't know how long that's going to take, but I do think our founders are doing well in spite of, despite. But I think from a macro, as an American, I think we are, what do they say? Cutting off our nose to spite our face. And I just think it's going to have economic repercussions.
Yeah. Yeah. I totally agree. I have two more topics I really want to ask you about, and then I have three more questions at the end.
Great.
So I don't know if we can fit them all in, but I will try. Um, the first one is just what are some small everyday changes that you would recommend to a VC that wants to open their eyes to investing a little bit more diversely, but maybe doesn't get a lot of deal flow or doesn't know how to evaluate it or whatever? Like, what are some small changes they can make today to be a little bit more inclusive in their process?
Yeah, I can give you three because we actually did a guide for this in a town hall. I
I
think
knew
one,
you'd have the right answer.
who you hang out with.
Yeah.
Step outside your comfort zone, right? Robert, I know there is nothing as profitable that is comfortable. So get uncomfortable. I think the second thing is just exposure. Go to places where diverse founders are hanging out. Go to where women are. Go to a Springboard Enterprise conference. Go to a Black VC conference. Just show up. I mean, they're usually inexpensive, and just put yourself there. And I think the third thing is, if you're intentional about it, get a committee together of people, right? That has done it before to tell you wisely what to happen. It's not the panacea. And so I think you've got to first make the shift internally that you're willing to be uncomfortable. Two, go places where you can be uncomfortable and see different perspectives. And then three, get some friends who can help you go through that because it is going to be some ebbs and flows.
Yeah. Okay. That's a great answer. Thank you. And then what do you like? What advice would you have for diverse founders trying to raise money today in this environment?
Find an alternative. And I say that, right. I think all these television shows have made people think like VC is the only answer,
Yeah.
and I think diversity in your capital stack is extremely important. I think one is make sure that you have diverse capital, right? Do you have your own money in there? Do you have some friends and family in there? Please go get some debt in there because venture capital is really expensive. So I think make sure that you have diverse capital stack and that you can afford the money that you're taking on. That's it.
Yeah. I think that's really, really great advice for actually all founders
Yes.
anyway.
Yes, because some
So
people are
true.
raising money and I'm like, you can't afford this. Like, I
Yeah.
understand what you put in your financials, but I don't think they're going to be accurate.
Yeah, yeah, exactly. Okay, so now I'm going to skip to my other three
Okay.
questions, which are more related to you, I guess, in the topic.
Okay.
Um, well, the first one, maybe that's may or may not be true, but the first one is what do you think is the most interesting or sort of surprising inside baseball thing that you've learned about venture capital coming into it from the outside?
I would say that all VCs worry every day, every day.
Yeah.
I think when I finally got on the other side, I did not realize because I think respectfully we do a good job. I did not realize how much we worry, and not on the financial returns. I think we worry about our founders, we worry about our LPs, we worry about the macroeconomic environment. So I was surprised. Like I think so many people want to be a VC, and I tell my students at Georgetown, like, "Are you sure?" 'Cause like I said, I have six kids. I think I worry more about the fate of my founders and what they're facing than I do about my kids.
Yeah, it's a really good point because there's so many. I mean, I totally agree with you, and I feel the exact same way. You, with all these founders you've invested in or that you're talking to, they all have really big challenges to
Right?
solve, huge
And
things
out
that
of
they're
their
going through.
control, right? I mean, that's
Yeah,
the thing. It's completely, there's so many things that, tariffs, trade, delivery systems, COVID jacked up a whole bunch of people. Like there's just so much out of your control. So I just worry constantly. And I think I worry for their well-being, their
yep,
financial and emotional well-being than I do, again, I think for my kids, just because I know what I've taught my kids. And I'm like, "Are you sure you're ready?" So I think that's the inside baseball.
yep. I think that's really good example. And then, what's the biggest failure you've had, and how did you learn from it? And this can be venture or not. It's up to you.
I'll say in venture, I think the biggest failure I have, and I still work hard not to, is believing in somebody else's dreams more than they do. In my early days of investing, people were like so excited, and I'm like, I'm there with you, and I did the diligence and I understood it. But I underestimated that first investment I made, the fortitude it takes for a founder to manage headwinds and friction consistently and making sure they're going to make it. And I realized that for that very first founder I invested in, I wanted it more than them. And that's not necessarily fair to them because there was a set of circumstances by which they just could not continue. But I was like, I was so mad. And at first I was mad at them and then I was mad at me. And I think the lesson was and this is a horrible example, but I am a gambler. I am betting on the jockey and the horse, and I'm in the stands. I can only do so much. And I think
Yeah.
that my failure was thinking I could push them across the finish line and then realizing I'm not even in
It's
the
not
damn
up to
game.
you.
I'm
Yeah.
not in the game. I'm a bystander. I'm not in the game.
Yeah. And then the last question is, what's the best advice you've ever received?
Even if scared, do it anyway. That's the best advice. Um, and being scared doesn't mean stupid. It means doing all the research. But I think again in this business, whether you're a founder or an investor, the anxiety and the level of uncertainty is real, and you have to figure out and trust your gut when it says I'm scared, but I'm going to do it anyway.
Yeah, that's part of what you were saying earlier too, like put yourself in an uncomfortable situation, right?
Absolutely,
Like you have to step out of your comfort zone if you want to make progress. It's
that's
just the
right.
way that we grow as humans, you know?
Right.
It's just, and I think the more you do it, the easier it becomes, you
And
know,
the
the
better you get
more,
it, right? Because
the better you get at it.
there's the subtle nuances and signal effects that you're like, I'm still not sure, but these three things based on the history and track record, I feel good about. Like those are risks that I think we can solve for. And if not, it's still not going to be the end of the world, and we'll figure it out. But I do think that's probably the best advice and the biggest thing, the biggest lesson that I've learned.
Ah, that's a good one. Any final thoughts?
I think I would say to the VC community, we are in the business of capital allocation, which is finance. We are not, I think we think we're in the business of building dreams and creating wealth, but we're in the business of betting on businesses that will do that for us. And so I think we have to depersonalize some of these decisions, and we have to allow the data to speak for itself. And while I recognize the huge dearth in data around diverse founders and around women, I think the data that we have says a lot. Women outperform. Women in board of directors positions do better. There has been a 40-year slow decline of white male entrepreneurship. So who are we going to bet on? Where are the jobs being created? I think we have to realize that this is not about us as individuals. It's about the field and the sector. And so if you're truly committed to being successful in venture, then you have to understand that diversification of asset class, of business type, of sector, of founder, of investment type, all of that is what's going to lead to a successful outcome and a true ROI. And I just hope that people are willing to put their own isms and biases aside to understand that as finance people, it is our job to deliver the alpha for our investors. And that means that we have to do what's best for them and not what we think is best for ourselves and makes ourselves comfortable. And I do think that that is what has been lost in this conversation
Yeah.
writ
Yeah.
large, not our conversation, but lost in the conversation that people are unwilling to do what they're not comfortable with. And the reality is that's not the job we're in. We're in the job to make money.
Exactly. Yeah. It's a tough one, but it's the reality of the situation. And I think that you're speaking from a place of wisdom, having done this a lot for a long time, to be able to say that and mean it. And I think a lot of people say it, they don't, or maybe like they think they're saying it, but they're not. They're not really. You know what I mean?
They're not practicing what they're preaching.
They're
Yeah.
not practicing it in reality, and that's the harder part, right? So, very cool. Anyway, thank you, Melissa. This was incredible. That's a wrap.